Welcome to the NEX Exchange interview, where I'm joined by Paul Johnson, who's CEO at Metal NRG. Hello, how are you today, Paul?
Absolutely delighted to be with you, Zach.
Right, you've got a long history on the stock market, known to many private investors through Metal Tiger and other companies. You're on the NEX Exchange now. How did you get there?
Well, we put some money as Metal Tiger originally into this small company called NRG. After the changes at Metal Tiger, I bought their stake out along with Gervais Heddle, who's CEO of Greatland Gold, and we raised some money a few months ago to reinvigorate the business, and now we're embarking on a bit of a cobalt blue future.
So lithium is supposed to be one of the big rare earth metals, or the metal to go for. Is cobalt in the same kind of area?
Yeah, cobalt's in the same kind of area with the battery technology that's emerging all around the world. Cobalt's intriguing. The price has more than doubled in the last year. There's a major supply-demand situation going forward. Unlike lithium, which has had a bit more advanced preparation, cobalt's kind of taken people by surprise a bit. There isn't the development out there in the next few years. So it's one of those exciting strategic metals that people don't fully understand at the moment, but I guess in a couple of years' time they will love tremendously. In Australia, there has been a bit of a cobalt boom already, and it's still bubbling away. Pull back a little bit, the usual thing. In the UK, we always track behind the Aussies, which is surprising. So we are tracking behind, and we anticipate that there will be a significant interest in cobalt plays on the London markets very soon.
So are you going to be a one metal company, or is it going to be all over the place in the next few months or years?
Well, at the moment there isn't really a dedicated cobalt play in the London markets. People fiddle around with cobalt. Normally it's a byproduct of nickel or copper deposits, so it's not a mainstream thing. Finding real good quality pure cobalt plays is very difficult. So I think we may well focus for a while on cobalt and try and drive the valuation of the company up. The traded liquidity on NEX Exchange is important for us, so we want more people to buy and sell the shares, and then see where that takes us.
Well, I mean, obviously one of the things about NEX is the question. People are sort of obsessed about liquidity, but I would put it to you that if it's an exciting company with exciting management and good profits prospects, people are just going to buy the shares anyway and sell them.
Yeah, to a certain extent, yes, but there still needs to be the raising awareness. There needs to be the enthusiasm for the focus of the company, which is why potentially a pure cobalt play is possibly a very good idea. We are more flexible in what we can do on NEX. We can do more aggressive deal making as a small cap. AIM has kind of surrendered on small cap resource plays and early stage exploration now, so NEX has a great opportunity to really come and take that business. And of course, in a couple of years' time, as the sector recovers, that's the kind of business that all the markets will want. NEX Exchange is probably the only market in the UK that's seriously engaging with early stage resource companies. So we've got many factors playing to our advantage, but it's absolutely key for us to increase pushing the message out, get the traded liquidity higher, and keep doing these transactions, and yet probably with a cobalt focus for now.
Are you surprised that more smaller companies in the resources area are not already on NEX?
Oh yeah. I wouldn't, because with the class test system on AIM, if you're a small company, it's very, very difficult for you to actually do anything adventurous or anything building the company efficiently, because the first step is you have to do an RTO, which is hugely costly, £500,000 potentially out the door, not spent in the ground. With NEX, they don't have the class test system, and they have a number of measures to assess whether something is a reverse takeover, and those measures are perfectly sensible, revolving around management control, voting control, and a fundamental change in the business. Absolutely great. We can deal with that. So we've been able to do a deal already, as announced, in US Cobalt, that would not have been doable on AIM, and it's important to understand. And the potential future transactions will probably fall within the same category. So we're delighted to be on NEX at the moment.
I mean, presumably with the costs, the relative costs involved. I mean, as a CEO, I would feel like I was under pressure. The clock is ticking, the meter is running in terms of the cost if you're a small company. And obviously to get on to AIM, there's obviously the big cost as well.
Yeah.
Are you sort of feeling more stress-free than you were before? in terms of starting? Because you've been through the process before as well.
Oh yeah, without question. A, because I know I can do deals, and B, because the overall costs of being on NEX are dramatically lower. Obviously, I have more interest in driving the awareness and the liquidity, because that's quite important for NEX vehicles. People have to have confidence they can buy and sell in any exchange for it to function properly as a stock market. But I think from so many different perspectives, this is the best place to be. I think if you're an investor in resource exploration, start to look for some of these NEX opportunities. The number of real quality opportunities on AIM are diminishing. A, because they're diminishing. B, because in order to do a deal on AIM, you have to spend so much money on advisors in reverse takeover processes. Everything is slow, cumbersome, costly and difficult. If you want resource exploration where you've got a bigger chance of retaining as an investor, a higher proportion of that interest, that project, that opportunity into the future, you need to be somewhere like NEX.
And what are the timelines? Because obviously we know that retail investors are very impatient. They've got a 1 month, 2 month, 3 month view on stocks, and they want a triple bagger and multi bagger in that time. What are your? I mean, for Metal NRG, what's your scenario over the next year or two?
Well, if you want your 10 baggers, then you're going to be in trouble on anything, because the simple reality is the vast majority of retail, private, high net worth, whatever investors lose money trading the markets generally. Only a few sharp operators, often with institutional backgrounds, I would suggest, actually make money off some of these high volume, high mover shares on AIM, or any market in fairness. In our case, we've got a history of building valuation within a business, of actually taking various projects, putting them into the company and growing the value of them. I would say if you've got a sensible time frame and you wanted to invest in those, you've got to look at 6 to 12 months as a minimum. I don't think it's a good idea to be trading into Metal NRG hoping for a quick 10% flip. So that rules out 70-80% of most of the institutions that you have in London, who of course delight in putting their shareholders into companies at massive discounts, prejudicing the original investors, the original shareholders, and then flipping out for 5%, moving on to the next play, which they do, of course, because these institutions charge their private clients huge amounts of money to go in and out. So they're delighted if the clients make a little bit of money and they make lots of commission. We're not in that game. What we're in is to build a very significant business. We want to find a big cobalt deposit at the moment. We want to put some sensible amounts of money in the ground. We're not taking the cash out of the business. We're not getting salaries in our company until the net asset value is 1.5 million. Our office costs are virtually zero, and we've got a very small amount of cash burn. So we're in the right place. We're spending money on finding new opportunities and investing in them. And that's how it will carry on for quite some time. And even when we do, if we do start to pay salaries, it will only be modest. It has only ever been modest in any of the companies I've been involved with. I saw a salary for a company this morning, and I did tweet about it, and it shocked me how much cash was going out the door to keeping that board in a wonderful lifestyle for 2015 and 2016, and over this period the value of their shares has fallen by something like 98%. It is shocking what's happening in the market. So if people give us cash, Deirdre in Glasgow with 100 quid, Fred in London with £1 million, whatever the amounts of money involved are, we will look after that money and steward it wisely and make sure we spend it investing in our projects.
Well, that's great news for Deirdre in Glasgow. Paul Johnson, CEO at Metal NRG, thank you very much for coming in today.
It's a pleasure. Thank you.